rise in mortgage rates?
That's an excellent question. And just for the fun of it, recently I was working on a note where I was looking at the correlation between, say, mortgage rates or mortgage spreads and oil rates. Pretty much no correlation.
Okay.
You can see times. But what really is driving this, as you said, the key here is what it's doing to inflation expectations. And more importantly, it's also creating a lot of uncertainty about what the Fed's going to be able to do, what direction rates are going to be able to go. What does uncertainty mean? Uncertainty means increases in volatility, both implied and actual rate volatility. Now, volatility is a huge driver of mortgage spreads because mortgage borrowers have the option, is what it's called, an option, to refinance or just not move anytime they want.
Right.
So as a result, the higher volatility is, the harder it is to hedge that borrower option. And the more expensive, the wider spreads need to be to both attract investors, but also for the rate that lenders are willing to offer, the primary rate.
Right.
And on top of that, you have added to that the fact that if inflation is expected to increase, mortgage rates are probably going to fall less quickly, which means long-term rates have also risen, as you pointed out, which includes 10-year Treasury. So you have the actual base case rate, the 10-year Treasury rate rising, and you have mortgage spreads widening because of this increase in volatility generated by the uncertainty of what's going to happen with oil and the war in general.
Are you thinking we might see a 30-year back at 7% again sometime soon, especially if the war drags on?
That would be a really tough question. I actually didn't see them getting above 7% in the first place. I don't think that's certainly the long-term equilibrium. I don't have a crystal ball, but it does seem to me that the widening of mortgage spreads that we saw that contributed to how high mortgage rates got in 22-23 was mostly because the Fed had just started running off its portfolio. It was still in tightening mode, which is certainly not my base case expectation.
Our thanks to Erica Nadelberg, Bloomberg Intelligence Chief Mortgage-Backed Securities Strategist. Let's take a look now at some stocks making news in the week ahead. I'm Alexis Christoforous with Tatiana Darrier, Bloomberg strategist for Markets Live. Tatiana, you brought three names with you. Let's begin with, if you're a pet owner, you know them well, Chewy.
Chewy, exactly. Chewy will report fourth quarter earnings next week, and analysts are expecting a solid profit increase versus the year ahead. And that may come to help the stock revive some of that momentum because it has come under pressure this year on concerns over growth and the profitability outlook for this year and next year. And analysts at Morgan Stanley expect this print to set the tone for the year ahead, and they expect full year guidance of about 7 to 7.5% revenue growth.
Wow.
So remember that number, because anything less than that could come to pressure the stock again. The company, has named a new CFO in February, reaffirmed its financial outlook. So it has tailwinds in place. Its revenue has been steadily climbing through the years, even as we've seen consumers come under pressure from all prices rising elsewhere.
Right.
Basically, so it has a momentum there. It's just that when people are looking ahead, they're concerned about consumers pulling back now with high oil prices. So we sort of need to see revenue outlook and that guidance be lifted so that the stock investors feel more reassured.
It's interesting when you talk about consumer spending, because sometimes we'll pull back on things for ourselves, but I think history has shown people don't necessarily pull back for their pets. They're still going to pay for their pets. Also, they have their Chewy vet clinics that I guess are in stores. I understand that's going to be a bigger part of the Chewy story, I guess, in 2026.
Yes, exactly. A push there, and they also have their sort of revenue or their online platform where you can schedule deliveries, and that's also been a big focus for the company and for the stock.
People, come on,
as
bro.
Those growth concerns have been battering the stock, it will be very
Smash that
important for
like,
them
man.
to
Come on,
go
bro.
back
Come on,
to
come on. Smash
what
it,
analysts
man.
have been saying to a
Don't
beat
be
and
so
raise
cheap.
cadence,
Right.
which they have not had
Wow.
in recent quarters. We have a great function on the terminal where you can see how results have been coming in pitted against expectations, and 5 or 4 of the past 5 have not really been great. The last one was better, which sets up hopes that this one will come in also better than expected.
All right, and just want to add, Morgan Stanley kept its overweight rating on Chewy, trimming its price target to $50 from $51, saying the stock is offering a, quote, compelling entry point following its recent decline. So Chewy on the move here in the coming week. Also, Beyond Meat, which I know is dropping the name meat from its official title, right? Tell us what we can expect there.
Well, the maker of alternative meat products is also due to report, but expectations here are much lower because they've already reported preliminary revenue and it came below expectations. With that, they also said that they will delay the filing of their 10K annual report because the company requires additional time to complete a review and analysis related to its inventory balances. And, you know, when you get messages like that, that always spooks the market. And
Sure.
this is something that this company did not need because
Yes.
if you look at the long-term chart, the stock has fallen dramatically since its much-talked IPO in 2019. It's lost more than 90% of its value since then. So it really doesn't have a good story. It keeps getting worse, and it doesn't have a good track record when it comes to earnings either. 4 of the past 5 quarters have seen earnings really disappoint expectations, and shares fall as a result. So the bar is pretty high here for a surprise.
Yeah, and you know, I know they're trying to expand beyond fake meat. They're rebranding as Beyond the Plant Protein Company. They're introducing these new products like high protein sparkling drinks and what they call simplified plant protein foods. We'll see if it's, you know, that's what it takes to turn things around. All right, let's squeeze Carnival in here, the cruise line. How are they doing, or how are they expected to do?
Carnival reports before the bell on March 27. What the street wants to know here is how much will higher oil prices impact its year ahead outlook. This is sort of the big question when it comes to earning forecast just overall in the S&P 500.
Yeah, it'll probably do well because it's low budget ghetto cruise line. So they're like the spirit of cruise line. There you go.
EPS outlook, or that's about a 20% hit to its overall guidance if you want to think in percentage terms.
Okay.
Well, if you look at the stock, that's about how much it has fallen since the war has started. So basically, you could argue that the market has baked that in already.
Okay.
But although this is an estimate, not a confirmation from the company, so we'll have to see if that comes in sort of higher or lower than expected. But the point is that the market has already baked in some bad news. Now we have to see how bad will the news actually be.
And Carnival, we'll have to see whether or not they pass those higher fuel costs on to consumers in the way that some of the airlines are doing that. I know some international airlines are charging fuel surcharges, but some American airlines, U.S.-based airlines, I should say, are adding it to the ticket price, to higher ticket prices, and whether or not that's going to, a slower summer travel season. Right now, it doesn't look like it's going to be. Lots to look forward to on the earnings front in the weeks ahead. We're going to leave it there. Our thanks to Tatiana Darrier, Bloomberg strategist for Markets Live. Coming up on Bloomberg Daybreak Weekend, there is an election in Denmark this week. We bring you a preview. I'm Alexis Christoforous, and this is Bloomberg. The news doesn't stop on the weekends, and now neither do we. Hi, I'm Christina Raffini.
And I'm David Gura. Join us for the new Bloomberg This Weekend.
Watch and listen for up-to-the-minute headlines, in-depth analysis, big interviews,
And thoughtful conversations about business, lifestyle, people, and culture.
Make us number one on that weekend to-do list, Saturdays and Sundays, starting at 7 a.m.
Bloomberg This Weekend. Join us on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app.
This is a Bloomberg Money Minute. The race to build out artificial intelligence is sparking a race to hire the workers who will actually put together those massive data centers. A lot of that work, though, is coming to rural areas without much housing. So developers are turning to an old solution. Call them man camps.
They're using the same assets that they were for immigration facilities or for major drilling projects during the shale boom. And they're using these assets now to build out these man camps.
Joe Lovinger is a Bloomberg News reporter in Texas.
There's abundant land here. There's abundant energy. And Texas leaders see this as an opportunity to overtake Virginia even in the data center space.
Joe says companies like Target Hospitality and Civio are luring electricians, welders, and pipe fitters not just with temporary housing, but game rooms, ribeye steaks, and free shuttle rides to work. And while the temporary housing is known as man camps, Joe says they are generally open to women as well. Nathan Hager, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak podcast, a conversation with Bloomberg Horizon anchor Jumana Bersetchi on the latest in Iran.
Yeah, that's right. And to your point, I think there was an attempt to at least de-escalate one part of the war yesterday, which is specifically the Israeli attacks on those gas fields in Iran, which was deemed to be a red line, and President Trump visibly trying to put a distance between himself and the military action that Israel conducted. And actually was interesting to hear from the Israeli Prime Minister last night, and he said that they did act solo, and upon the U.S.'s request, they are not going to be targeting energy infrastructure anymore. Now, that's not to say that strikes on infrastructure are still not taking place. As we understand, there was a heavy wave of airstrikes over central Tehran overnight as well. But in retaliation, I mean, Iran keep going and they keep lashing out at Gulf allies. Overnight, more rounds of attempted attacks on some key refineries in the region. Another refinery in Kuwait this morning announcing that it is halting production. This is the second day in a row that it's been targeted. They've also launched projectiles towards Saudi Arabia once again, towards their eastern oil fields, the northern part of Saudi Arabia. And even yesterday, an attempt on that Yanbu port, on the Red Sea, so not even on the Persian Gulf. So the strikes on energy continue. But I think one thing that has become apparent from the U.S. and Israeli perspective is the strikes on the Iran gas fields the plan is for that not to be repeated again.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Hello, I'm Michelle Hussein. On my new podcast, I speak to people like Mark Carney.
It's not a transition, it's a rupture. You have to act big, you have to act bold.
Salman Rushdie.
When a writer enters the family is screwed.
Every weekend, you can count on one essential conversation to help make sense of the world. Listen and subscribe to The Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
Now, a sports update on Bloomberg 1130.
Women's NCAA basketball, the three local teams in action on Sunday. One will advance. That's 9th-seeded Syracuse, who beat number 8 Iowa State. Losses for Fairleigh Dickinson and Princeton. Matthew Schaefer scoring his 22nd goal. Didn't matter, though, as the Islanders lose in Montreal. In Grapefruit League action, the Yankees fell 3-1 to the Tigers. They open Major League Baseball schedule Wednesday in San Francisco. And the Mets fall to the Nationals 3-1. It's your Bloomberg Sports Update. I'm Rob Bushko.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Alexis Christoforous. This week brings us an election in Denmark, and Daybreak Europe anchor Caroline Hepker is here with a preview. Caroline?
Alexis, Mette Fredriksen's party was polling at historically low numbers, but barely a month ago, the Danish Prime Minister called a general election. Now, proportional representation means that there are more than a dozen political parties running in this vote. with governments in Denmark usually formed from parties within two main blocks, either the blue bloc on the right or the red bloc on the left. Denmark also faces many of the same issues in this election as in many other European countries, from housing costs to food prices, welfare, inequality and immigration. But it is President Trump's efforts to control Greenland that have created a major foreign policy crisis as we head into Denmark's 2026 election. And joining me now to discuss is our reporter in Copenhagen, Sanna Vass. Great to speak to you, Sanna. I just want to ask you how important you think these elections are now for Denmark.
They're very important. Denmark is in the middle of a diplomatic conflict with Donald Trump over Greenland, which is part of the Danish kingdom. Denmark is currently negotiating with the US to find a solution to Trump's desire for more control over this island. And the next government in Denmark will have to deal with the next steps. So our Prime Minister, Mette Frederiksen, she's framed this vote as a decisive election because Danes in the next election term will have to define their relationship with the US, but also the future of the Danish kingdom. So it's a very important election.
Yes, indeed. But then why was the election called quite a few months early?
Yes, that's right. I mean, in Denmark, it's the Prime Minister who decides when to call an election. There is a 4-year constitutional deadline, but it is quite common to call the election early when the Prime Minister sees that the timing looks politically favorable. And that is the case right now for Mette Frederiksen, our Prime Minister. And it's all tied to Trump. She performed very poorly in the polls in December. And then she got this massive boost when Trump, he started making new threats over Greenland in early January. And this spat, it just really reinforced her image as a disciplined and steady leader during periods of national crisis. And that is something that she's hoping to capitalize on with this vote.
So then the US and President Trump looming over this election, what are people saying in Denmark and also in Greenland? And you might explain also that there are some seats in the parliament in Denmark, correct, for Greenlandic representatives?
Yeah, Greenland elects 2 representatives for the Danish parliament, and they could definitely play a very important role in defining the future Danish government, and for sure the future relationship with the US and the future of Greenland will play be an important question in those negotiations. Generally for both Denmark and Greenland, it's the first time in their modern history where geopolitics is really top of mind for voters. We've seen the topic feature in national party leader debates, and that's quite unusual. We also saw a poll earlier in the campaign that found that foreign and defense policy, that was the number one concern for Danes. And so in a way, Trump, he really turned foreign policy into a domestic issue, and voters they're likely to assess politicians on their leadership skills and their capacity to handle the unknown. And that is favoring especially the governing parties and the Prime Minister.
So then tell me a bit more about who is favoured to win according to the polls.
The Prime Minister, Mette Frederiksen, her Social Democratic Party looks set to become the biggest party by far, and that will give her the first shot at forming a government. And looking at the polls, she is the most likely candidate to secure a majority backing to make her Prime Minister again. The biggest outstanding question, I'd say, is whether she will return to a traditional left-leaning red bloc government or look to renew or expand the quite unusual centrist kind of cross-bloc coalition that we have at the moment. One of the biggest challenges for going with renewal of this government is that Mette Frederiksen has proposed to introduce a wealth tax, and it's something that's drawn sharp criticism, and especially from wealthy people in Denmark. Some are threatening to leave the country, but also from the liberal parties who really struggle to enter a coalition on those terms. But remember, Denmark has a very fragmented political system and or political landscape, and there's 12 parties in the running. That leaves the outcome very open to kind of late shifts in alliances and policies once coalition negotiations start, and that could really reshape the balance of power. So we are preparing ourselves for potential surprises once talks begin.
That'll be interesting. What about other issues, though? The Danish Prime Minister is known for her tough stance on immigration. How could the outcome of this election shape Denmark's direction on that front?
Yeah, that's right. Frederiksen, she originally in 2019 rose to power in Denmark because she managed to steer her Social Democratic Party towards a tougher stance on immigration, and she in that way reclaimed working class voters who had drifted to the right. She's also been very outspoken in the EU, pushing for stricter border controls and tougher immigration policies. And the election could really shape Denmark's direction on this topic in the future, especially if Frederiksen were to pivot to the left to create a more kind of left-leaning majority. It could complicate her ability to maintain this strict approach to immigration. So that's definitely something that not just the Danes are following, but for sure also across Europe.
Come on.
So then, what role do you think that Denmark wants to play then, or will want to play in conversations around the EU and the US?
I think a striking comment that Prime Minister Mette Frederiksen made in a debate on TV quite recently was that the US is no longer Denmark's closest ally. Instead, she's called for closer collaboration in the EU, but also with other like-minded nations such as Canada, for example.
I'm sorry, Denmark. You're a fucking little country. If it wasn't for the United States of America in World War II, Denmark would have been speaking German. So you gave us Greenland back in World War II. Back then, we should have just took Greenland. We should have said, you know what? We're not going to give you back Greenland. Because we use Greenland for military purposes, like protecting you fuckers. So yeah, Denmark keep talking shit. They're a little fucking country. That's what you are. You're a little fucking Danish country. That's it. Okay? The USA is the big dog. We're the big dog. We protect Europe. Okay? We're the one that's dealing with Iran right now. We're the one that's smashing them up. Because all you Europeans out there are too much of a fucking pussy to join us. Okay? So Denmark, go fuck yourself. How about that? If we want to, we could take it. And we're not going to take it. You know what? We're going to have our bases there anyway. And that's it. As long as you guys don't fuck around with the Chinese and the Russians and start letting them roll around Greenland, then we good. That's all he wants to do. That's it. Okay? That's it. So you Danish and Canadians all pissed off about, oh, you're going to take over Green. You're not going to take over Green. He's just fucking trolling you guys. He's just trolling you guys. He is the master troller. President Trump is a master troller. He loves to fuck with everybody. And you Canadians are stupid. Fucking elbows up. Give me a fucking break. You shut the fuck up. Stay the fuck out of our business. Stay the fuck away from Greenland and shut the fuck up. Okay? Right now, we're kicking Iran's ass. we're doing the job that no one else wanted to fucking do. We're fucking doing it. Okay? That's the bottom line. Okay? Especially Spain. Fucking shame on you. Okay? That's the bottom line. We're doing the job that nobody wants to fucking do. We're kicking Iran's ass. Okay? So Europe, take a back seat and shut the fuck up. You shut the fuck up. Please.
I think in Denmark, generally,
fucking Denmark. Get the fuck out of here.
On foreign policy, and so it leaves little opportunity for candidates to differentiate themselves. So parties, they are instead directing.
Stick to making fucking Danish.
Towards more domestic issues,
Dumb
like taxes and pension reform and agriculture. That's where
Gertie. 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 Gertie.
And of course, there is also another element of unpredictability still, and that is that the election is very vulnerable to outside attempts to influence it. Denmark's intelligence service warned recently that foreign powers, including Russia, but even also the US, may seek to interfere in the vote. And there is especially a worry amongst lawmakers running for election.
Do you hear this fucking bitch? You hear this shit? That we're trying to interfere with Denmark's vote. We don't give a fuck about you. If you want to take Greenland, we can just take it. Okay? And I know you sent a whole bunch of NATO countries went to Greenland like to really stop an invasion. Are you fucking kidding me? Are you kidding me? Are you fucking kidding me? Yeah, when we want to go attack Iran, you guys were like, oh no, you can't. Spain was the first one. Oh, you cannot use our bases to launch airstrikes on Iran. What a bunch of fucking pussies. These are our fucking allies. They're a bunch of pussies. England, same thing. Oh, now they changed their mind. Oh, now we can use your bases now. You know? Are you fucking kidding me? You know, World War II, we fucking kicked Germany's ass to rid of Nazism in Europe. And I guess you people forgot that. You fucking Europeans forgot that. Okay? So get your head out of your asshole and realize that we're the big dog. Whether you like it or not, we are the big dog. Okay? We're the big dog. We're the one that's kicking her ass right now. We're going to put them back in the Stone Age where they belong. Okay? With or without your help. That's what we're doing. Whether you like it or not, that's what we're doing.
Were over Houston yesterday afternoon, creating sonic booms as it fragmented. Sherry James says a piece crashed into her house.
That was the first thing come to my mind. It was immediate.
NASA says the piece about a ton was roughly 3 feet in diameter. CBS News Brief. I'm Stacey Lynn.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Business Week Daily podcast, a conversation with Ian McGinley, partner at Sidley Austin and former CFTC Director of Enforcement, on a judge temporarily banning Kalshi from operating in Nevada.
We've seen other states take very similar steps. What usually happens is there's then some litigation in federal court. This was a state court judge. And whether it then goes back to state court or the federal judge handles it, it really depends. But this other states have done similar things.
You know, I can't tell, Ian, if we're putting the cart before the horse here. In other words, it feels like crypto, where things kind of moved ahead, and we haven't kind of put in place the safety infrastructure, the regulatory infrastructure. And I look at valuations growing. I mean, is everything getting ahead of itself? Do we need at this point regulators to set some things up here?
Well, so there's a few things going on. And like you said, there is a lot going on, right? On the one hand, you have legal regulatory developments. On the other hand, you have just the businesses
growing tremendously.
Right.
Sponsorships.
MLB is pretty serious.
I mean, that is a huge endorsement of the type of trading. But I think there's a few things. There is regulation. You know, there was insider trading.
Right.
Yeah, and I think, you know, that's something that people need to realize. And when there are talks about insider trading and things like that, that is prohibited. Always has been. There's a little bit of nuance to it. But the CFTC recently this week put out something called a Notice of Proposed Rulemaking.
Hear the full conversation on the latest edition of the Bloomberg Business Week Daily podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Breaking news first. The Fed decides.
No change in rates, one dissent.
The chairman will stay on as chair until a successor is confirmed.
The implications of events in the Middle East for the U.S. economy are uncertain. Reaction first to the Powell press conference.
How for longer is higher rates. That is the perception.
A dovish pause is not what I would expect.
They decided to completely ignore the Middle Eastern shock that we're facing here.
For the latest headlines from the Fed, stay with Bloomberg 1130. Context changes everything.
This is a Bloomberg Money Minute. The boom in artificial intelligence is making everyday chips more expensive.
If the memory chip makers are devoting their time to making high bandwidth memory, they're not making other types of chips that go into your phones, your cars, your laptops, your other electronics.
Sarah Fryer wrote the story for Bloomberg News, and she says tech giants are buying up memory chips like never before.
It's causing a bit of a crisis in consumer electronics where people don't know when and if relief is going to come for this dramatic shortage.
So that has chip makers trying to balance manufacturing with projected demand.
If they scale up their production, which they're going to do, they can't do it too much or else they might have a glut.
And that would send their prices lower. The crunch is also affecting gaming console companies, including Sony and Nintendo. I'm Charlie Pellet, Bloomberg Radio.
Donald Trump is rewriting the Washington rulebook and reshaping the global economy. If you're trying to connect the dots behind the headlines, Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, head of government and economics at Bloomberg. Every week I'll bring you a smart, focused conversation with reporters and experts from Washington, Wall Street and beyond. Listen to new episodes every Wednesday and follow Trumponomics wherever you listen.
When your car is making a strange noise, no matter what it is, you can't just pretend it's not happening.
That's an interesting sound.
It's like your mental health. If you're struggling and feeling overwhelmed, it's important to do something about it. It can be as simple as talking to someone, or just taking a deep, calming breath to ground yourself. Because once you start to address the problem, you can go so much further. The Huntsman Mental Health Institute and the Ad Council have resources available for you at loveyourmindtoday.org.
What's the right way, actually, to be a leader? Well, I don't think there's one right way to be a leader, but I will tell you, for me, it means living my values. I'm Francine Lacroix, an award-winning journalist, and I've got a new podcast, Leaders with Francine Lacroix, from Bloomberg Podcasts. I speak with top chief executives and global industry leaders for candid lessons on leadership, management, and the future of work.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen. We talk about how they motivate people, and how do they handle the challenges of the moment and successfully plan for the challenges ahead. Start your week with me exploring what drives the world's most influential minds and what we can learn from them. Listen to new episodes every other Monday. Follow Leaders with Francine Lacroix wherever you get your podcasts.
Hello, I'm Michelle Hussein. On my new podcast, I speak to people like Mark Carney,
It's not a transition, it's a rupture. You have to act big, you have to act bold.
Salman Rushdie.
When a writer enters the family is screwed.
Every weekend, you can count on one essential conversation to help make sense of the world. Listen and subscribe to The Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
Stay connected with Bloomberg wherever you are with Bloomberg Podcasts.
On the Big Take Asia, Asia is bearing the brunt of the Iran war energy crisis. On Trumponomics, AI is being built to replace you, not help you. And on Odd Lots, how war in the Middle East will squeeze America's farmers even further. Listen to Bloomberg Podcasts on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts. Bloomberg Podcasts. Context changes everything.
Now, a sports update on Bloomberg 1130.
Matthew Schaefer picked up his 22nd of the year in a losing cause. Islanders let an early lead slip away, falling in Montreal. Women's NC2A, Fairleigh Dickinson lost to Iowa. Princeton came up short against Oklahoma State. Ninth-seeded Syracuse a win over Iowa State. And in Grapefruit League baseball, Yankees fell 3-1 to the Tigers. They opened their season Wednesday in San Francisco, the lone game in baseball. Mets, a 3-1 loser against the Nats. It's your Bloomberg Sports Update. I'm Rob Bushka.
Bloomberg Surveillance, your home for insight on international relations. With guests like Gita Gopinath of Harvard University.
We just had the biggest oil shock in history.
Ali Safavi of NCRI.
I think the Iranian regime is at the end of the line. The economy is bankrupt.
And Ellen Wald of the Atlantic Council.
We're seeing a global energy crisis unfolding in real time.
Bloomberg Surveillance, weekday mornings at 7 on the Bloomberg Business app, Bloomberg Originals, and always on Bloomberg 1130.
I'm Alexis Christoforous with your global look ahead at the top stories for investors in the coming week. Chinese EV maker BYD will report earnings. For a preview, let's go to Bloomberg's Doug Krisner, host of the Daybreak Asia podcast.
Thanks, Alexis. Last month marked the first time BYD sold more cars abroad than in China, and the company is now the world's top seller of EVs. Its manufacturing operations have expanded outside of China. BYD has a new facility in Brazil and a joint venture in Uzbekistan. For a closer look at BYD and what we're likely to see when the company delivers earnings, I'm joined by Bloomberg's Linda Liu. Linda is China Cars reporter. She joins us from our studios in Hong Kong. Thank you for being here. Can we start with the domestic side of BYD's business? Most brands in China have been facing struggles, and I know weak domestic demand on the mainland has obviously been a major factor for quite some time. Give me your sense of BYD's business in China.
BYD and other Chinese EV brands in China have been facing a number of challenges. To start with, the Chinese economy has been slowing, so you have a weak demand. The government has been trying to stimulate retail sales in the form of subsidies, and cars had a trade-in subsidy that really promoted EV purchases. But that has started to be scaled back starting from this year. A tax break that previously exempted about 10% in sales taxes has slowly to come back, starting with 5% this year. And subsidies that had previously gone to a lot of mass market models, affordable models, that which BYD is really strong in, has also been reduced. So demand has really been hard hit. In the first 2 months of this year in China, you're seeing sales falling compared to last year. So BYD has a really tough time, not to mention competition. You've got rivals like Geely that is really chasing its tail, essentially coming up with models that's exactly targeted at the models that BYD has offered. So I think BYD is really trying to shake off this stalemate with a launch of new technologies, such as innovations in charging, as well as battery technology.
Over the last few years, I know there have been some pretty intense price wars among the EV makers on the mainland. What is the situation with that right now?
The price war has been raging now for a number of years, coming into its third year. It's a really tough situation in China because there's an overcapacity. Essentially, the country's car makers are producing more cars than customers can buy. So they really need to get sales rolling by slashing prices, keep the factories operating. But in the long term, they are really hurting themselves in margins and revenues. So financially, it's not sustainable. And actually, you've seen a number of effects on China's auto supply chain where car makers demand really heavy price cuts, essentially slashing prices of components from its suppliers. So in turn, they can pass some of that price cuts on to customers, but that really is just a lot of pressure on the entire supply chain. So the government really is trying to rein in the price war. They've told car makers they need to pay their suppliers on time. They really shouldn't be selling vehicles at a price that's below the cost to make them. And we're starting to see some of the car makers start to raise prices. But I think we're still waiting to see exactly how that's going to play out because the overcapacity situation hasn't changed.
And BYD has been using foreign markets as a way to deal with that excess inventory stemming obviously from the overcapacity issue. I'm thinking of Europe in particular. Is that still the case?
Yes, and Europe is a very attractive market for BYD as well as Chinese EV makers because the European market, they will be able to afford more expensive EV models. And the EV adoption rates in Europe, especially when you look at countries like Norway, is very high. So Europe is a very a natural market for Chinese EVs. But at the same time, Europe has its own domestic industries that it needs to protect. So that's why you see the European Union levying this tariff against Chinese EVs to try to slow this wave of EV exports to Europe. So far, actually, it hasn't really slowed down the Chinese EV exports that much because we're still seeing a very healthy growth. But I think the thinking for the European Union is that they hope the Chinese companies will consider investing and forming joint ventures with local European partners. So the jobs at least will, remain in Europe, and maybe there'll be job creation and technology know-how transfer to really help Europe's domestic EV making industry.
So speaking of joint ventures, as I mentioned earlier, there is a JV in Uzbekistan, and we know that BYD is expanding manufacturing to include Brazil. What's at work here in terms of the strategy?
Localizing production is quite an important step for automakers as they expand globally. We've seen that with the Japanese automakers like Toyota, Honda, Nissan, as well as the Korean. So I think it's very natural for the Chinese automakers like BYD to start bringing production overseas to markets where they can see a very sizable volumes that would make sense to have localized production. And in a sense, it's also one way for these brands to really build local recognition and goodwill. If you're bringing a lot of jobs with the factory you're building in the new market, I think that will build, that will really help propel your brand, not just among the local consumers, but with the local governments.
Where is BYD when it comes to autonomous driving?
Autonomous driving is a technology that automakers are really trying to stay on top of, especially when you look at Tesla and Elon Musk's vision for robotaxis and autonomous driving. Because if this technology manages to reach a mass adoption stage, that's going to change the entire consumption pattern when it comes to cars. If the vehicles can drive themselves, does it even still make sense for an individual to own cars anymore? Maybe you can just have a robotaxi fleet that serves a community or that serves a city. So the automakers, I think, are also trying to have their own autonomous driving technology and thinking about what the business model is going to look like in the future. And now they're doing a lot of exploration. BYD is developing its own smart driving technology in-house, but it's also working with external suppliers such as Momenta. This week, we've also seen a number of Chinese EV makers join up with NVIDIA onto NVIDIA's latest smart driving platform. So they're trying different routes and hoping that in the future that they will be part of this transport disruption and won't be left behind.
You mentioned Tesla. I'm curious, when you look at the rivalry between Tesla and BYD in China, how do they compare?
The dynamics just keep changing all the time. Tesla, for a very long time, was seen as the pioneer for the EV industry. It was really the brand that kick-started, everyday consumers' kind of acceptance of EVs with these really technological laden EVs, that actually drive for a range without charging, that's more useful for daily lives. BYD for quite a number of years was playing catch up to Tesla. But last year, it finally became the world's biggest brand in selling EVs. And Tesla, as we know, was hit by a backlash against Elon Musk's, political views and activities. And now, I think going forward, the competition dynamics is going to change again because we're seeing BYD bring out all of these new EV charging and EV battery technology that I have to be honest, I haven't really seen from Tesla so far. It seems like Tesla and Elon Musk's priorities have shifted to robotics. They're trying to really get their humanoid robot off the ground, as well as robotaxis. So the focus has changed so much for Tesla that I'm not sure if their heart is really in the game anymore just to be an EV company.
It seems like you're describing the rate at which you can charge a Chinese EV and how that compares with other manufacturers, right?
Yes. So BYD had a product launch recently in which they claimed the latest generation of their EV platform and EV batteries allows you to charge from 10% to 70%. From 10% to 70% in 5 minutes and nearly full charge in just under 10 minutes. Now, with a charging time like that, it really changes the whole paradigm when you're thinking about EVs as well as petrol-powered cars. Essentially, now you probably will be able to get rid of range anxiety if you can power up an EV in the same amount of time you would have been able to fill up your car with petrol. So that's BYD's goal, is to essentially make EVs as easy and convenient to use as petrol cars.
So we have earnings from BYD in the week ahead. Give me your sense of what the market is expecting, what to look for, and when we view the stock, how has the stock been performing and what is it reflecting right now?
Earnings is going to be tough for BYD. They've had a couple of quarters of falls in their net income. So looking forward to the full year results, they may actually have a first annual decline in profits, probably since the pandemic days. This is largely due to this whole erosion of margins and profits in China's ultra-competitive market where you've had this price war go on, as well as regulatory scrutiny that basically forced BYD to really clean up its balance sheets. BYD's sales growth has also slowed a lot, so it's facing all of these pressures for its upcoming earnings. And in terms of stock price, it's come down from a high, but it's still actually doing a lot better than its rivals, such as Geely. I think people still see BYD as the technology pioneer in the EV industry. And but in the short term, I think there's going to be pressures on the stock price as the whole autos and EV industry in China is facing a lot of challenges with demand.
Linda, thank you so very much for helping us preview earnings in the week ahead from Chinese EV maker BYD. Bloomberg's Linda Liu. She is China Cars reporter joining from our studios in Hong Kong. I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Alexis.
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Alexis Christoforous. Stay with us. Top stories and global business headlines are coming up right now.
From the financial capital of the world, 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is WBBR New York, Bloomberg 1130. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at CBS News. This is CBS News on the Hour, your home for original reporting.
It can be history.
I'm Stacey Lynn. The war against Iran is in its fourth week, and now President Trump is threatening to destroy power plants in Iran if the country does not open the Strait of Hormuz.
20% of the global oil supply goes through the Strait of Hormuz, which remains effectively paralyzed over the war. The president said it would need to be guarded and policed by the countries who use it. A British official tells CBS that the UK is now working to bring together European allies to assemble a military coalition with equipment aimed at safeguarding the strait. Christian Benavides, CBS News, West Palm Beach.
Iranian media reporting Tehran will strike U.S. infrastructure in the region if plants are hit. The BBC's Sue Montgomery says Saudi Arabia expelled an Iranian diplomat from its country yesterday over the strikes.
Saudi Arabia has ordered Iran's military attaché and 4 other embassy staff to leave the kingdom within 24 hours after declaring them persona non grata.
Exactly.
In a statement, the Saudi Foreign Ministry said continuing Iranian attacks on the country.
By the way, I'm in favor of that. Trump blowing up the oil fields. You know why? They're going after everybody's oil fields and all that, right? So, you know what? What's good for the goose is good for the gander. I say the U.S. destroy every Iranian oil field. Level it. That way they have no way of making money. Cripple the fucking country. You know? By the way, Doug Masters, Iron Eagle, when he flew into that so-called Iranian country, or Iraqi country, whatever it is. Remember what he said? Oh, you just lost $1 billion in oil. Iron Eagle did it. He blew up an oil refinery, right? Because they didn't want to release his dad on time. He wanted his dad on the runway so he can pick him up and fly him back to the U.S. And they delayed it. Oh, you delayed it? You just lost $1 billion in oil. Iron Eagle did it. Why can't we do it? I say blow the shit out of the Iranian oil fields. If gas is going to go up, blow up Iranian oil fields. We don't need them anyway. Blow them up. You know, blow them into smithereens. That's what I say. Just like Iron Eagle. Doug Masters. You just lost $1 billion in oil. Boom! Boom. That's it. That's what you do to the Iranians. Start hitting them with the oil. They want to block the Strait of Hormuz. Blow up their oil refineries. One by one. And you're going to see that shit's going to stop. Fast.
I did, and I suggest you do the same, is call a licensed insurance agent and let them walk you through your Medicare Advantage plan options. There are so many benefits you have access to, so make the call now and let the representatives explain everything to you. Our licensed insurance agents can offer you a variety of Medicare Advantage plans. Plus, the call is free, the information is free, and there's no obligation to enroll. We're here to make it easy for you to select a Medicare Advantage plan that may work for your needs. Finding a Medicare Advantage plan can be easy if you do what I did. Make a quick call right now to learn more. Thank you.
800-768-5180. 800-768-5180. 800-768-5180. That's 800-768-5180.
If you like to have a glass of wine at dinner or kick back and just relax with a glass of the nectar of the gods, here's some good news for you wine drinkers. A glass a day for women and 2 for men could lower your risk of dying from heart disease, about 21% lower than non-drinkers. A new study from the Central South University in China looked at benefits gained from drinking different types of booze in moderation and found while there were the positives from wine, it did not see the same with beer or liquor. In fact, they were actually linked to a 9% higher risk of dying from heart disease. A recent Gallup survey found beer is still the most popular alcoholic beverage in the U.S., followed by liquor and then wine. Experts caution that any kind of booze in excess still could be hazardous to your health. So if you do drink, moderation matters. Stacey Lynn, CBS News.
Now, a sports update on Bloomberg 1130.
Another impressive goal for rookie Matthew Schaefer for the Islanders, but they imploded in the third period north of the border, falling to Montreal. Women's NCAA, Fairleigh Dickinson, they came up short to Iowa. Princeton, the same against Oklahoma State, while ninth-seeded Syracuse marches on. They beat number 8 Oklahoma State. In baseball spring training, Tigers 3, Yankees 1, and the Nationals a 3-1 winner over the Mets. It's your Bloomberg Sports Update. I'm Rob Bushka.
Bloomberg Radio, on demand, and in your podcast feed.
On the latest Balance of Power podcast, we talk with Christopher Smart at our Broth Group about market risks surrounding the war with Iran.
There is this downside case where we're stuck with a pattern of much less oil getting through at a much higher risk, which will keep this price of oil much higher for a longer time until, of course, there's a global recession, which will bring demand down and bring the price back down. So it never stays at $150 for too long, but that would be the worst possible outcome from an economic point of view.
And, of course, it comes through on the consumer end with $3.91 gas today. That's the average, the national average, according to AAA. All the while, Christopher Smart, Russia is cashing checks, making money here thanks to looser sanctions.
Yeah. Anyway, 6 more minutes. I'm going to end this live stream. Smash the like button. Subscribe to my channel. By the way, Danny Radio and Tech 30-day live stream. Day number 22. Yeah. Go check it out. Smash the like button over there. Subscribe. Be a member. However, who knows? I may be streaming over here after that. 30-day live stream for that one.
Very large oil reserves, large coal and clean energy sources, which will help cushion the blow from lost oil from the Gulf.
Hear the full conversation on the latest edition of the Balance of Power podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Bloomberg Tech returns to San Francisco, June 3rd and 4th. Join me, Emily Chang, along with Tom Giles, as we convene the CEOs, investors, and innovators shaping what's next in technology. Powered by Bloomberg's global newsroom and unrivaled terminal data, we'll break down the capital, connectivity, and big ideas driving the industry forward. Be part of the conversation. Register now at BloombergLive.com/tech. That's BloombergLive.com/tech.
This is Masters in Business with Barry Ritholtz on Bloomberg Radio.
I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My extra special guest today is Bill Miller IV. He is Miller Value Fund's Chief Investment Officer and Portfolio Manager. Previously, he was at Legg Mason Capital Management back in 2008. Covering specialty finance and consumer space. He has played in the Poker World Series main event, and his father is the famous Bill Miller III, who started Miller Value Fund and famously beat the market for 15 consecutive years. Bill Miller, I feel like I have to add the fourth. Welcome to Bloomberg.
Thanks for having me. It's great to be here.
So I want to talk about your investment philosophy, what you're doing at Miller Value today, but let's roll back a little bit. Beforehand, you get a degree in economics from Tufts and then an MBA from Dartmouth Tuck School of Business. Was investing the original career plan?
No, it wasn't the original career plan. When I was growing up, I went to a small private boys' school in Baltimore, Maryland. Never really knew what I wanted to be when I grew up, but when I pointed out to my parents, they said, well, just consider school as your job, and the harder you study, the more options you'll have down the line, and it'll help you figure it out. So
that sounds like pretty good advice.
I followed it. I did well academically in school. So when I went to Tufts, I think the primary concern was somewhere where I could actually play baseball. Mm-hmm. So growing up as a huge Orioles fan, that was something that my dad and I often did together. He was my coach in Little League, something I'm doing now today for my son. Sports teach you a lot about being on a team, about how to operate, how to internalize what you can and control what you can, and not focus on the rest. So learned a lot from that.
Did you play baseball in college?
Yeah, but I wasn't very good. So I learned that pretty quickly. I played for 2 years.
The difference between the guys who are good and really good is so tiny. Just like a little wood on the bat once or twice more a week, and you're in a different tier.
Exactly right.
It's fascinating.
Yeah, and, I probably deluded myself for a while about how good I could be, but I also probably didn't focus on the right things, and knowing what I know now about how to get better and improve at things, I could have been much more systematic about it than I was.
Huh. So you start your career at McKinsey. Why consulting? What led to that?
Yeah, well, so I interned for my dad's group in college, loved it, learned a lot, but then, on-campus recruiting came along, and McKinsey was one of the names, and I just applied to it, did a little work on it, and made it through that interview process, which was pretty rigorous. And I got an offer from McKinsey, and I said, hey, Dad, I love being with your group. Investing's a lot of fun. What would you do if you were me? And he said, well, you can always tell McKinsey, you can always come back and work for me. But if you tell McKinsey no, you'll never have a chance to work there again.
Right.
So it was this concept of optionality again. And also he knew, and I didn't know at the time, but they placed an immense amount of focus on professional development. And so that was a really valuable place to spend the first 3 years of my career. So I was working on a huge variety of consulting projects. Mainly, actually, the job I had there now, I don't know if it exists because of AI. So what I was doing was remotely supporting teams on research efforts and deep dives on stuff, which now you just ask ChatGPT about it, and he probably does a better job summarizing everything I could possibly do. And
assuming it's accurate, which is always a little bit of an if.
Right, that is a big if for sure. Yeah, focusing on primary sources is still a critical skill that I think a lot of people underemphasize.
What'd you take from your years consulting that showed up and as helpful as an investor?
One of the things, this might surprise you, less so about the data-driven nature, because my dad's a data-driven thinker, and thinking quantitatively has always been in my wheelhouse. But the thing that I learned at McKinsey more than anywhere else would be to focus on client service and how to interact with people, how to do the subtle things that show somebody else is the client. In finance, when you're managing money, it's very hard to differentiate yourself. And that, Ken French, who was a professor of mine at
famous Fama French factor model at Dartmouth, sure.
You got it, exactly. One of the things he imparted on us was how long does it take to know if a money manager is actually any good? And the answer is, from a statistically significant basis, longer than any money manager's career.
Right. I was going to say 10 years, 20 years?
It's 20